Now, when it comes to investing into ETFs on Trading212, the number of available options can be dizzying. Now, this is especially true when you try to invest into, something like the S&P 500. There are dozens and dozens of funds that, offer the S&P 500. So it can be very, very confusing for a beginner investor. Now, recently I've came across this fund here, the Vanguard FTSE North America, which sounds very good. It's an entire continent. It ought to offer a lot of diversification, should it not? And then I went into its holdings and I realized, this sounds a lot like the S&P 500. So in this video, we're going to, explore the question, is the Vanguard FTSE North America fund just a glorified S&P 500 fund? Now, I'm going to be using the stockbroker Trading212 to do this comparison, but this fund should be available on many other stockbrokers. But if you would like to sign up to Trading212 and receive a free fractional share worth up to £100, then all you have to do is to click the link in the description box down below. Alternatively, if you've already signed up to Trading212 in the past 10 days but have not received a free fractional share, then all you have to do is to click the 3 horizontal line menu over here. Scroll all the way down until you see the section use promo code. And in this section, just enter my code JUBAIR and you should receive a free fractional share. But anyway, let's go back to this fund here, the Vanguard FTSE North America. Now, there's almost no point in comparing the performance figures. 2 reasons. One, past performance does not actually indicate any sort of future growth. And the other thing is that the stock market is very volatile and they change very quickly. However, in this video, I'm going to quickly just show some comparisons so we can see in terms of performance, are they pretty similar? So this is the Vanguard FTSE North America. Over the past month, we are at a positive 9.3% gain. This is the Vanguard S&P 500 accumulating fund, and I'll explain in a moment why I chose that, but you can see over the past month up by 9.1%, extremely similar between the two ETFs. Now, the reason why I've chosen to go with the VUAG instead of the VUSA is because the comparison, of course, is with an ACC fund. This is an accumulating fund, which means any dividends paid out by investing in the companies in this index, they are just reinvested automatically back into the fund. So as the name suggests, North America should be a lot more diversified than just the USA. But in practice, we know that the USA, in terms of economy, is the #1 economy all over the world, not just in North America. Now, this fund has an expense ratio of 0.1%, so it's 30% more expensive than the Vanguard S&P 500 alternative. Is it worth that extra 30% fee? Now, in terms of assets under management, £1.24 billion, which is a lot, which is a significant amount, and I would say this is a significantly sized ETF. Assets under management can't really tell the full story, but it's likely that, if a lot of investors have a lot of money in an ETF, they won't just cut it because a lot of people's money is at stake. Like I said, this is an accumulating fund, and we can just look at the average annual returns. These are annualized returns, by the way. Over the past year, 8.25%, past 3 years, 8.45%, and the past 5 years, a huge amount, 18.11% annualized return. So really, really good. But again, very similar to the S&P 500. Now, this is where we actually make the comparison. We can see the top 10 holdings of this fund. You can see Apple at 6.14%. It will be less than the S&P 500, but you can see Microsoft is the second biggest one at 5.54%, and then Nvidia at 5%-ish, Amazon at 3.54%, and Meta 2.5%. You can see the rest are pretty much all the same as the S&P 500. Now, in terms of sector, I don't really like to show sector breakdown because I feel like a lot of these things can overlap. For example, we know that the S&P 500 is very tech focused, and also some things can be, put together. For example, a lot of these companies that might be put under financial companies, they may also be a technology heavy company too. For example, something like PayPal. But we can see the breakdown here looks very normal. But when we go into countries, we can see where everything starts to break down in terms of North America. I mean, the name suggests North America, but we can see 96.2% is in the United States of America, or companies, operating or dealing with them. Even though we know that basically companies like Amazon, Uber, they don't always, operate out of the USA for tax reasons, but essentially they are US companies. So Canada currently is only at 3.73%, which is really, really small. And in fact, we get a bit of UK companies here. So you can see when I go into holdings in the Vanguard North America, you're going to have to scroll a bit until you see a Canadian company. So from the information, we can see that this fund seeks to track the performance of the FTSE North American Index. Now, as we have pretty much seen now, we only have investments in the USA and Canada, so 2 countries in the entire North America. Not very, North America encompassing for me. But then you can say there are 2 main countries that have stock exchanges in North America, and that's just Canada and the USA. So let's go back to the Vanguard S&P 500. I'm not going to compare performance figures numbers from here because it would have just changed, and we have already concluded that they're pretty much very similar. But let's look at the other statistics. So you can see that the expense ratio is 0.07%, so 30% cheaper, and the assets under management is 10 times larger, so it's quite a bit bigger than the Vanguard FTSE North America. So when we look at annualized returns, we can see a very similar story over the past year, 7.96%. This will be slightly lower than the VUAG just because you might have some Canadian companies that have just caused it to go down a bit less. But the 3-year annualized return, very, very similar, and you can see the 5-year return too, very, very similar. Now you can see under asset allocation, pretty much the same companies, but a bit higher of a total weighting just because you don't have that 3 to 4% of Canadian companies. You can see Apple at 7.3%-ish, of course, Microsoft at 5.9-ish%, Nvidia at 5.56%, Amazon at 3.7%-ish, and Meta at 2.64%. Now under sectors, you can see a very similar story with the Vanguard North America, but when you go into countries, you can see this is 100% the USA. Now by no means am I trying to give any financial advice or anything like that, but it just goes to show that, you can't just look into an ETF and just find the name and think that's what it's going to encompass. A lot of these all-world funds can be quite deceptive with the name all-world, and you go into it and you see it's like 5% emerging markets. So it's really up to you to do your own research and find out if that's the right ETF for you. If you are willing to pay 30% extra, which again, total expense ratio of 0.1% is still very low, then I guess what you get in return, a slight bit of diversification for your S&P 500 needs, although pretty much this is somewhat of a glorified S&P 500 fund. One thing I will say is that on Trading 212 anyway, if you're trying to find a Canadian ETF, there aren't really much from, the likes of Vanguard or iShares. If you do want to have an S&P 500 fund and then you want some more exposure in North America, you could always go for something like the iShares MSCI Canada. So this allows UK investors to basically invest into Canadian stocks as an ETF. This is an accumulating fund. If we quickly try to compare the performance figures, we can see that this fund has been doing really well over the past month. Not as good as the S&P 500, but very similar, which can be surprising to anyone who actually doesn't look into the Canadian markets, much like myself. But anyway, you can see from the stats that this fund aims to track the performance of an index composed of Canadian companies. The expense ratio is very, very high at 0.48%. Assets under management just under £1 billion. We can see the annual returns here, annualized again, over 1 year 2.48%, 3 years 6.8%, 5 years 7.55%, and 3 years 3.83%. So herein lies one of the reasons as to why perhaps the weighting in the Vanguard FTSE North America is much heavier weighted towards the USA, as USA is the larger of the 2 economies, and the performance of the top 100, 200, 300 companies in the United States of America has greatly outweighed the performance of Canadian companies as a whole. But anyway, you can see here under top 10 holdings, we have Royal Bank of Canada, which is 7.68%. We have Shopify, which I didn't know was a Canadian company, at 5.85%. We have Toronto Dominion Bank at 5-ish%, Enbridge, Brookfield, Canadian Pacific, a whole bunch of companies here, including the Bank of Montreal. But yeah, you can actually see this for yourself. Bank of Nova Scotia too. So this fund would make sense to anyone looking to invest into a tiny bit of Canada whilst also having a good exposure in the top companies of the USA or the S&P 500. Personally, it's not one that I would run at straight away. I will just probably rather stick to just the S&P 500 or a good all-world fund with a low total expense ratio. So make sure to check out some of my other videos, and I'll see you in the next video.